Congratulations to you. If you're able to make it to the second episode of this Forex trading course right here on this YouTube channel, then congratulations to you once again. Because in today's tutorial, there are some two most important things in Forex trading, but very tiny. And those are the things that we are going to be looking at today right here. So these things, we have the swings and we also have the breakout strategies. These things, like I said, they are basic things. But then with a little mistake that you are going to make with them, your whole trading could turn around in a bad way. So pay close attention as I walk you through, and of course I'm going to be take my time and be explaining things one by one. And if you want to fast forward it, you can put the playback speed on 1.5 to make it go faster. But I'm going to take my time to make sure I explain everything for you to understand. So yeah, let's jump into it right away. See you. So there were two major things I mentioned in the previous video, the part 1 of this Forex trading course. If you don't watch it, go watch it right now. It is the basic foundation of all that we are going to do in this course, right? And like I promised, everything is going to be simplified to make trading simple for all of us, right? So let me actually delete all this over here. These were from the previous session we had. We'll delete all of them right away. Good. Now we have a cane board. So the two main things that we talked about the last time that I want to bring over here for us to discuss, we have swings and we also have BOS, breakup structure. Now in that particular period, I told you that there are some breakup structures that are valid and there are some that are not valid. But then before we go to the breakup structures, I want us to talk about the swings. Since I told you that I'm going to make use of swings more than using higher highs and higher lows, or lower lows and lower highs, I'm going to be using swings in the market a lot. So when I'm referring to swing, this is exactly what I'm trying to refer to, right? Let me just draw something over here for you to depict something. Let me use this red option over here. I'm going to draw another one over here too, just like this, then another one by the side, just like this. Then I'm going to just add something like a wick. Sorry, my drawing is crooked. So let's assume these are candlesticks in a market, right? So I want you to look at this carefully right now. Let me zoom in. I want you to look at it very, very carefully right now. So when you pay close attention over here, what do you see? All right, what do you see? Now what I want you to see or identify is the fact that when you look at this candle wick over here compared to the wick of this candle and compared to the wick of this candle, what you realize that the wick over here is higher than all these other wicks available. So this particular wick is what we're going to be referring to as a swing high. Why is it a swing high? If you look at it, it is above this level and also above this particular level. That is why we refer to it as a swing high. It's very simple, very, very simple. It's a swing high, right? Now let's make a progress. Let's make progress quick. Let's make progress. Now let's assume we have another type of candles, right? Another set of candles forming like this. We are just doing some quick stuff over here, right? So pay close attention and follow carefully. This is just a rough sketch, all right? I think I'll show you more on the chart except so that you can see exactly what is going on the chart. Quickly, let me label this one before I go. So over here we have swing, now if you look at this over here, all right, this particular part, you will realize that, let me just do this right. If you look at this part, you will realize that it is lower than this and lower than this. And if you follow exactly what I taught the last time, I drew something like this and I told you that this place over here is a low. All right, is a low. As a low, and also drew something like this. and I told you that the top over here is a high. All right, it's a high. That was what I told you the last time, if you pay close attention. Now, coming back to this week of the candle over here, that drop just here is lower than this level and lower than this level. So this particular one is called a swing low, right? Swing low. Like I said, you want everything to be very, very simple. You don't have to complicate it. Just understand it and you are good to go. All right, so this is a swing low. Now we are going to be making use of this thing a lot in a market. Take note, if this doesn't occur, there is no way you qualify something as a swing high or swing low. Let's assume we have something like this. I want you to understand this once and for all. All right, let's assume we have something like this. Let me see. All right, good, perfect. So now let's assume we have something like this. In this case, there is no swing high and there is no swing low. Why is it so? If you look at this, the middle candle over here, it's not taller than the surrounding candles. The middle candle over here, it's not taller than the surrounding candle, or it's not even lower than the surrounding candles. So there is no swing low or swing high in this case. I want you to understand one thing in that when we are talking about swing high or swing low, it's basically like three candlestick formation, whereby the first candle, let me use this, whereby we have one candle over here, then there is another candle formation over here, which is taller than the first candle. And when you go forward, the third candle, it's also lower. It's also, in terms of swing high, all right, in terms of swing high, the first candle is lower than the second candle, and the third candle is also lower than what? The second candle, meaning the one in the middle is higher than the surrounding candles. That makes this a swing high. The same thing applies when we're talking about, bearish scenario. All right, find out what the color of this one I'm using. Just focus on the explanation, right? Let's assume we have this in a bearish market. All right, let's assume we have this in a bearish market. This is the first candle, the second candle. You could see the second candle is lower than the first one. Now, if the third candle also come and it is also lower than the second candle, then the second candle over here qualifies to be called, this particular part qualifies to be called a swing low. It's as simple as that, right? Let's move on to the next thing, which is the break of structure, right? That's what we want to talk about. Let's look at a break of structure quickly and we go, right? So break of structure, it happens in so many ways, right? But then there is only one valid way I consider, and that's what I use, and that's what I'm going to teach you. It is when a break of structure occurs with a body of a candle. It's as simple as that. There is nothing else. So let me also draw this quick. All right, so let's assume this is a candlestick, right? And it was moving up. All of a sudden, then it decided to come down, right? And what do we see over here? We see price came and closed below this other candle. And what did it close with? It closed with the body of the candle. Now, closing with the body of the candle has given us an understanding that what this is a break of structure, either to the upside or to the downside. It is a break of structure because it happens with the body of the candle. But then what if we have something like this? I'm just going to draw a similar thing again. But this time I'm going to add wicks to it. So let's say we have this. There's a wick of the candle. A wick of the candle. Now if you look at this, you will realize that price actually came below this particular level. You realize that this particular candle, it came here, but then it couldn't close over here. It went up and closed at this level over here. So does this qualify to be called a break of structure? Absolutely not. This is not a break of structure. Why? Because it's only break here with a wick of a candle. So we don't want to see a wick of a candle and call it a break of structure, right? It's as simple as that. It's very, very simple. All right, so now let's go on to the chart and have a look at these two things that we've discussed and see if we will be able to locate any of them on a chart, right? This is a 15-minute time frame on gold. I want to use this to just do the illustration for you, then we call it a day. All right, now first we are going to look at a swing high and a swing low in a market. Now if you listen to what I told you earlier, this candlestick over here, this side over here, it's, I don't know if you can see clearly. I'm just going to zoom in again. This part over here is a swing high. Why is it a swing high? There is a one candle over here, the first candle, second candle, third one, but this one is the tallest among them. The same way when you are coming down, if you look at this candle, look at this is the first candle, second candle, all right, third candle. But then if you consider this particular candle in the middle over here, you realize that what it has 8 wicks lower than this candle before it and a candle after it. So this particular area also qualifies to be called a swing low. Then if you go up, you want to look for swing high, we are not seeing some. And if we come here to this place too, we can call it a swing low. If you go up, you check this place as qualified to be called a swing high because it is higher than the candle before it and higher than the candle after it. When we come down to, I want us to locate a lot of stuff, right? So if you consider this candle over here too, this and this, you realize that this candle has a wick, the black one over here, all right, it has a wick which is lower than this particular one and this particular one. So this one qualifies to be called a swing low. All right, it qualifies to be called a swing low. And the same thing when you come here, you will say this candle, this one has a wick higher than this, but then this candle actually hasn't closed yet, so we cannot determine if this qualifies to be a swing high or not. However, if it closed below this wick, that means we can call this wick over here a swing high. You can go on and locate a lot of them. This is one. If you check, this is one. So let me use this. Over here, this is one. When you go up, you will see this is one. This is one. This is one. There's another one. There's another one over here. And you come down, this doesn't qualify. All right. This one doesn't qualify, no. And this one, it qualifies to be a swing high, right? This particular one over here qualifies to be a swing high. But one thing I also want to let you know is when you are marking the swing highs in the market, it's not advisable to mark like 2 swing highs before you mark a swing low. Always, the way market moves, market will always give you the 2 when it is moving. It will give you swing high, swing low, swing high, swing low, swing high, swing low, or swing low, swing high, swing low, swing high. It will give you in that format. So whenever you see 2 swing highs in a row, you definitely have to take one into consideration and ignore the other one. For example, if you come here, we've seen a swing high from here, but when you go through, there is no swing low, and all that we could have is what, another swing high over here. Then we move until we've seen a swing low over here. So this particular swing high, we are going to ignore it. Then look at the swing low over here and see what swing high did this swing low actually form. So it has formed this one. Then we have a swing low again, forming another swing high. We have a swing low, which in turn form a swing high over here before it starts to drop. And as it is dropping over here, there is no swing low yet until this place that we had a swing low. So yeah, that is it. All right, that is it. That's something I wanted to know. Now I want to talk about the BOS, break of structure. Let's quickly check if you see some over here. Then we call it a day. All right, I want to show you something quick based on what we just explained, a valid break of structure and an invalid break of structure. Now if you look at what is happening over here, you will see a price broke above this price of this candlestick. It pushed above, but can we call this a break of structure? Absolutely not. Why? Because it happened with the wick of the candle, so that cannot be qualified as a break of structure. All right, and note, a break of structure happens when price takes out a swing high or swing low in the market. When price takes out a swing high or swing low in the market. That's why I have to show you a swing high and a swing low first before we even go ahead with other things, right? So this is not a valid break of structure. Now let's look and see. If you look over here, all right, if you look closely over here, this is a swing high, right? And what happened over here? It got taken out. Is it with a body or with a wick of a candle? All right, I don't know if you can see clearly. I'm referring to this particular place. Is it taken out with a wick or with a body of a candle? Obviously it's taken out with a body of a candle, and that means what? It is a valid break of structure over here. But what happened over here happened with a wick of a candle, so it is not a valid break of structure. So when you see this, you don't consider it as a valid break of structure. Let's see if you have some other one. Now good, this is a swing high over here, and you know why it is a swing high already, based on the qualification. The candle before it is lower than it, and the candle after it also lower than the wick above over here. So this is a swing high. Now did the swing high got broken? Of course it got broken over here. Is it with a wick of a candle or with a body of a candle? It got broken with the body of the candle, so that qualifies to be called a break of structure, right? Qualifies to be called a break of structure. All right guys, that is going to be all for now. I believe you've learned something from this. Just take your time to, I want to give you these two assignments. Take your time and locate a valid break of structure on the market. Locate a valid break of structure, and also locate an invalid break of structure, BOS, on the market. After that, try to identify swing highs and swing lows in the market. So I want you to do something. When you come to my channel over here, you go to any of my video description, you'll see my Telegram channel link over there. This is the Telegram channel link. You can join the Telegram channel and we have a discussion over there. All right, yeah, it's as simple as that. Let's get interactive over there and share ideas together. Now if you want to access any of my platform, this is a general link that you can just click on and it will take you to this page over here. Any service at all you want, you're going to get it over here. You can just click here to join my Telegram channel, or you can sign up with my recommended forex broker, and this is the Profim account that I use. The Profim that I use. You can get some with a 15% discount of any challenge that you buy. All right, so that's going to be all for this video. I'll see you in the next one. Yeah.